We continue with complex groups. After the consolidated reserves, we then compute the non-controlling interest. The non-controlling interest, we pick the figures in the goodwill calculation, 28.2 and 13.2. Then from the consolidated reserves, we had transferred the group's share from the 13.7, we transferred 70%, therefore the 30% goes to the NCI. From Chimney, we transferred 56%, therefore 44% goes to the NCI. Now remember, in the goodwill, we had taken only 70% of the consideration. We are taking only 70% of the consideration, therefore the 30% goes, it's a portion which the NCI has to contribute in the consideration, so that is subtracted from the NCI. Total the two NCIs to give you a final NCI balance of 37,460. Once we're done with the NCI, we can now start our consolidation. However, in an exam setting, you may need to do some other workings which would depend on what the examiner has given you in the question. However, for this question, in like not most, but all questions, these three workings we've looked at are major workings which you have to compute in any question where you're consolidating the statement of financial position. You have to know how to compute the goodwill. You have to know how to calculate the consolidated retained earnings and how to calculate the non-controlling interest. We start with the balance sheet. The balance sheet, we consolidate line by line. We get 100% of the parents, 100% of the subsidiaries, PPE. We do not time apportion in the balance sheet, so we get 100% of the PPE. If there was a fair value adjustment in the tangible assets, would have had to add or subtract the fair value adjustment and take into account the amortization, the depreciation. In this case, we don't have, so just get that total, which gives us 506,400. The goodwill comes from the working that we just looked at. Then we get 100% of the intangible assets for the parents and the subsidiaries. Then we had a fair value adjustment the 3.5, we had amortized it for 2 years, so 3.5 minus 1,400 gives us a carrying amount in the fair value of 2.1, giving us a total of intangible assets of 53.7. We add the non-current assets to give us our total of 574,560. Then we bring in our current assets. The current assets, again, we get 100% parent, 100% from the subsidiaries. Now, current assets is a makeup of receivables, inventory, and cash. In the inventory, we subtract the unrealized profits on the transfer, on the sale of goods in Note 3. We had calculated unrealized profit as 800. We subtract that. From the receivables, we are told in Note 3 that the current account balances of both companies showed that 3 million of the invoices issued remained unpaid. As parent-subsidiary relationship, you do not owe each other. You are one in the same company. So receivables and payables are eliminated. So the 3 million is eliminated from the receivables to also be eliminated from the payables, because one is owing the other and one owes the other. To give us the total current assets of 164,700. We add the two totals of the current assets and the non-current assets to give us a total of 260,000. We move to the equity section. Share capital we only get for the parent. Reserves we get from our working. The non-current asset we also get from the working, to give us total equity of 352,960. Then we bring in our non-current liabilities. Again, 100% parent, 100% subsidiary. There's no adjustment in the non-current liabilities. So our total is 266,000. Finally, we bring our current liabilities, 100% parent, 100% subsidiaries, in the 3,000 payable in Note 3, which we've already dealt with under the receivables. We had intimated that this should come out from both the payables and from the receivables to give us a total of 120,300. The 120,300 is added to the 352,960 to give us a total of 739,260. And we are done with the consolidation. Go back and review the video, understand the calculations, try and listen to it over and over before you pick on an exam question to attempt.